Good morning, everyone. I wanted to go over NVIDIA since we have the earnings this week, and I'm not going to talk about the business at all, really. I'm just going to be going over it from a technical analysis point of view. The only thing I am going to discuss about the business is the actual consensus UPS. So with that said, let's go ahead and jump right into it. So before we even start, the consensus has been moving up every single earnings, and what that means is that they're expecting greater and greater growth, and greater earnings and beats each quarter, that's reported. So the last earnings, I believe the consensus was 0.77. I think it was 75 or 77 cents. This consensus, they're expecting a 0.85 cents, which is, pretty absurd. Uh, One thing to note though is that the EPS has beaten 15 out of the last 17 quarters, so I think it's fair to have those type of consensus numbers. Um, I mean, NVIDIA is obviously the leader of the market and everything right now. But with that said, let's talk about where the moving averages are and where the Bollingers are. Also where the ADL is, because I think we're getting positioned in a way that can set up for multiple things. Anyway, so currently right now the 5 mile is at 138.40. Since the market closed Friday at 134.43, this is very likely going to open around the 136.20 mark, give or take. We have the 10 mile at 135.47, so the 5 mile should still be above that 10 mile or very close to it. We have the 20 mile is at the 130.10. So again, the 5 mile and 10 mile are going to be above that level. We have the upper Bollinger at 146.12, and then we have the lower Bollinger at 114.07. We're still quite a ways from the lower Bollinger. I'm not really too worried about heading down that far right now, and we're still heading upward towards the upper Bollinger. But let's go over the hourly time frame as there's a couple structures I want to show. Hold on, let's hide these. So we have this really nice inverse cup that formed here. Let me see which candle it was exactly. Alright, so it's all the way from down here. And I'm sorry, this cup isn't perfect at all, but the inside wall should be at that 127 candle. But we're just gonna keep it there anyway. But what we should expect now is if we're gonna continue heading down, is that we're gonna pull up, form some support, and finish this inverse cup out. And what I'd be looking for, if we do have that happen, is that I would want a large head and shoulders to start forming here. And that would give us, that inverse cup handle. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. But if we're going to be heading to the upside, what I'd be looking for, hold on, let me go ahead and delete this. What we would be looking for is for this to turn into a cup essentially. I know that's a really wonky cup, I apologize. And for a handle to form to signify that we're going to start heading upward. But looking over the daily chart really quick, we do have this very large inverse cup right here. We're right at this candle, right at this 113.05 pulls down, and if this is forming a a handle for this large inverse cup, then we're going to see this top out very soon here and basically break this level, form a very large head and shoulders, and then break downward, right? If we're going to head upward though, and we definitely can, we have some good bullish structure forming here. And we should just expect a handle or a right shoulder. We can expect the inverse head and shoulders here to pull upward and to start closing some of these gaps. We have the gap at that 143 area. Then we have this upward gap at the 153. So just look for those cups to start closing upward. Those drawings should not be there. And just to show on the 4-hour chart, this would be really good liquidity. So if we do see that inverse head and shoulders play out here, we should expect, that upward move. And with the earnings on Wednesday, that should be expected to happen pretty soon here. It's in an area where it's consolidating. As you see, we're seeing the 5 mile pull down. If we continue seeing selling and that handle forming, then we're going to see the 5 mile pull closer to the 10 mile into the the 20 mile, and then that could form a ton of liquidity between the upper Bollinger and lower Bollinger, for a good breakout. And I actually have some options suggested for this. One moment. Now for the options I'm looking at, it's actually one of the first times I've used the desktop options, so I apologize. I'm looking at the March 14th, and the strikes I have set up are the 133 call and the 136 put. That should be a very good straddle. That gives you plenty of room. So let's just pull this in the hourly chart for a moment. I want to hide the Bollingers. So if you took a 133 call, that puts your call strike down here. Down there for the call. Puts your put strike right in there. So it's extremely reasonable within, 3 weeks time, that we're gonna break either above or below this level. As I've mentioned, we're building liquidity in this area to either break out or break down. So 3 weeks is more than enough time. I wouldn't really suggest lower than that because you're gonna start getting into some really high IV contracts, and I think that the extra time's absolutely worth it. You're really not spending too much for an extremely well hedged position, and with the extra time, it gives you plenty of days to cut the contract, and still make a quality premium on the upside or downside, for the contract you do keep. So that's what I suggest, and yeah, we're gonna go ahead and end the video there. I hope you all have a good week, have a safe trading week, and good luck with the earnings. Take care.